When you combine the politics with what's happening in the markets, you've got a big week ahead, of course, with jobs reports as well. No one better than Charlie Gasparino, Fox Business Network. Always great to have him on KCMO Talk Radio. And Charlie, before we get to what's coming up, I got to ask you about Jerome Powell. You know, they had the big meeting up in Jackson Hole, Wyoming this past weekend. What came out of that, and is there anything that Main Street needs to know coming out of the Jerome Powell and all the big, bankers meeting up there in Jackson Hole?
Yeah, I think the sort of takeaway for that thing was that they are not sure that they've whipped inflation. Remember back in the I'm old enough to remember this whip inflation now. Gerald Ford's little buttons that he said, here's how the American public can help fight the war against inflation. Really, the American public can't do anything about it. It's all about monetary policy primarily and fiscal policy to an extent. So Jerome Powell controls the monetary policy side of that. That's the printing of money and interest rates. And what he basically said is this, we don't know. And, if this, and we're going to keep rates kind of where they are now until we see real signs that inflation's coming down. Remember, the rate of inflation is coming down. Prices are still high. So the rate is not, we didn't get like a price decline. We essentially got a rate of inflation decline. What you hope for in that environment is that wages pick up so the inflation is below the wage rate, wage increases. And we're still really, we're kind of there, but not really there. And it's kind of a mess. I mean, listen, none of this was going to be easy, right? If you lock down the country, which we did in 2020, right? Mm-hmm. If you do that, if you print a gazillion dollars, you take interest rates to zero, if you keep spending money on the fiscal side, that's what the government does. If you do all that for 3 years, you're going to have imbalances in an economy. And the imbalances we got was stock market bubbles and raging inflation. And you can't really put that genie back in the bottle fast. So That's essentially what he's saying.
Mm-hmm. Now, Charlie, I find it interesting, and speaking of that, you're right to point out inflation is down, but doesn't mean prices are down, and inflation at 3% is still 50% higher than their target. So, like one of our competitors here in Kansas City, when the recent inflation report came out, they had their news story say, congratulations, your dollar goes further. It's like, no, that's not how this works. They're trying to sell people on this idea.
Yeah, I mean, it's stupid to do that because your dollar is not going further. It's going less in reverse.
Yes.
If you understand, I mean, if you're thinking of an analogy, you're still behind the eight ball because prices are still high. Now, if you see the problem is to get the prices down, right? The absolute price down, you really have to induce either two things you have to do. You have to wickedly increase supply, and you do that through tax cuts and deregulation, which sleepy Joe Biden's not going to do, right? Mm-hmm. Or you induce a recession. That's kind of the only way to do that, and he's hoping. I mean, generally, that's the only way to do that. I think what Powell's hoping is that somehow we can just level off the rate of inflation so much that wages pick up and they sort of surpass the inflation rate, and so we've achieved essentially a soft landing where it doesn't matter that the prices are higher, your wages have picked up, but that's not easy.
No, Charlie Gasparino.
We haven't had real wage increases in decades. I mean, when was the last time we had? I mean, we had some wage increases under the Trump administration, but they were better than what it was under Obama, but they still were not great. Mm-hmm. We haven't had that type of wage sort of increase with low inflation since I would say the 1990s during the tech bubble.
What do you think?
All that .com stuff.
Yeah. What do you think all this means, Charlie? I mean, with rates where they're at right now and Powell's showing no sign of slowing down, there appears to be this, I believe, misperception that, in a year or two, maybe rates will get back to where they were. But do you think we're in for this thing for the long haul with this high interest rate environment, or will it depend on what happens in 2024 in the election?
I think we're in for it for a while. I mean, I think inflation is going to have to come down really sharply, where they're worried about a recession for them to start cutting rates. Like it's going to have to sink really that they believe we're on the precipice an economic slowdown that's significant.
Mm-hmm.
I just don't see them, wickedly cutting rates anytime soon. They may pause, which I think they're going to do. But listen, I'm only as good as my sources, so to speak. I don't have I don't have Jerome Powell's ears.
Yeah.
But this is just what I'm reading between the lines and when I'm talking to people on Wall Street. We're going to be dealing with higher rates for a while, but it's all data and information dependent. I mean, if the economy does tank like tomorrow, they'll cut rates. They'll take it down. You know what I mean?
Is there something that could trigger that? I mean, I see, mortgage applications are at an all-time low. Is it the $1 trillion in credit card debt? Is there something that you believe could trigger that?
When I talk to people like Larry Fink at BlackRock, what they're telling me is that there's still a lot of money sloshing around the economy. That it's like a flood of money that is still out there, that it's hard to sort of take that out of the economy to slow things down in a sort of way that's not wickedly recessionary, unless you took rates up, hiked them. If you doubled them, I'm pretty sure we'd go into a recession, right?
Mm-hmm.
So there's the economy. This is the problem that they have, that inflation could come back tomorrow, given the amount, at 5%. I mean, that's like a possibility.
Yeah.
Given the amount of money that's out there. So it's kind of a guessing game. I mean, it's just something. Listen, if you're an investor, this is kind of like the biggest thing you should worry about, because it impacts housing prices, your stock portfolio. And no one really kind of knows what the future's like. It's not. This is not something that you can spend a month investigating and come to a conclusion. By the time I spent a month investigating, the dynamics would change. You know what I'm saying?
Yeah.
This is very difficult stuff.
Mm-hmm. Charlie Gasparino, Fox Business. Always good to have him on KCMO. What are your Wall Street sources saying, Charlie, coming out of that GOP debate last week? Anything of note?
No, it's basically the same. It's Trump is ahead, although his lead, if you really look at the numbers, I mean, this is like where I talk to political consultants that work at some of the banks and big private equity funds, and they all have them. Mm-hmm. You look at his lead, it's kind of squishy in the sense that, okay, so he gets 60% of the vote nationwide, but like 40% of that 60 tells you, they're open for another candidate. The problem is that other candidate's not coming. I mean, DeSantis just underperforms, and listen, the guy as a governor is a very good governor. You kind of want him running, but he'd be a good guy to run the country. But he hasn't lit everybody up.
Mm-hmm.
You don't feel like Vivek lights people up, but kind of lights him up too much. He doesn't look like he has the experience. And if you saw the debate, you know what I'm talking about.
Yeah.
He has weird things on Israel, and if you go back, and he's got a business record, which is kind of, I just found out yesterday, I interviewed the farmer bro, Martin Shkreli. I did a story on foxbusiness.com. You should check it out. I think I might have sent it to you. Vivek was Martin Shkreli's biggest investor in one of his business ventures before he went to jail. So, he's all over the place. You know what I'm saying?
Yeah. Well,
Nikki Haley did a good job, but still, she hasn't moved the needle. Christie, he's smart and pugnacious, but hasn't moved the needle. So, that's kind of a stasis. The way DeSantis is running it, and this is just from same type of sources, these Wall Street guys that follow politics. So every firm is worried about who's in the Oval Office, obviously. So they hire a lot of people to do this. It's such a weird dynamic of with DeSantis, because what he's waiting for is for Trump to sort of face plant, or for all these indictments to build up to the level that he structurally cannot run. That's kind of his strategy right now, and he's trying not to piss off, excuse the French, the Trump voter as he does that. He'll take some shots at him, but he's threading a needle, because you don't want to lose that voter,
mm-hmm.
If Trump is in jail or wherever, or just can't run.
Mm-hmm.
So it's not easy, but running a campaign on a face plant is on the other guy face planting is not like a winning strategy usually.
No, it's not. And I want to ask you, Charlie, last thing here on the article that you did put out here over the weekend. It's only a matter of time until environmental social governance ESG movement will die. RIP, as you write here. Yep. A lot of people will do cartwheels if and when that happens. Explain to us here to wrap it up why you think the ESG movement will die.
Well, it is happening as we speak. BlackRock is the biggest money manager. It's scaling back significantly on voting for proposals at shareholder meetings that push the ESG agenda. Reducing carbon footprint, board of directors that have to be, 50% women or minority or whatever. I mean, that was a big thing for a long time, and it was a whole investing movement. Part of that, BlackRock was huge into that. They've scaled back dramatically, and I just read yesterday that Vanguard, the other big money managers, those are the two biggest money managers in the world, is doing the same. So ESG is, let's just say, the rate of ESG inflation is going down significantly. And, from what I understand, is if you're a client of BlackRock's and you want them to manage your money, there's no demand for it anymore.
Well, that's great.
People aren't saying, big people with a lot of money, like big investors, are not saying, "Oh, make sure my portfolio is ESG compliant 100%." They just don't want that. They want performance now. And so if you combine the fact that it's highly politicized, right?
Mm-hmm.
Red state governors, treasurers going nuts, actually, penalizing the BlackRocks and the Vanguards of the world if they do this stuff in their own pension funds. Remember, all these big red states have their own pension funds. Like Texas has its own pension fund. It's basically banned BlackRock because of ESG. You have that and a tremendous scale back in demand.
Mm-hmm.
It's not long.
Well, that's great news, and I'm going to pop the article up on our social media pages for people who missed it. Charlie Gasparino, Fox Business. Hey, Charlie, always appreciate the time. Thanks so much for being here.
Anytime. Thank you.
You as well. Charlie Gasparino doing great work on KCMO Talk Radio. This article he wrote, RIP to ESG. This is very welcome news. And by the way, Missouri, one of the many states leading the way on pushing back on ESG, which is great news.